Hi, everybody. Got a little pro tip for you. I was doing some things that were causing me to be in a down and a slump there for a while, but I got them corrected, and I passed two XFAs yesterday with using trade copy. I'm really excited about that. But I wanted to get on here and kind of show you what I was doing wrong and what you can do to prevent it, and also go over a few of these day types. The last two trading days of this week were garbage days, so I'm not going to go over those. But this type of day is a directional day. You can see we opened and we just started lower and we went all lower all the time. Most traders expect every day to be just like this, but they're not. Most of them are up and down and up and down. They're V shaped patterns. That's the norm. 70% of the time, the days are going to look more like this. I just put this blue line in here so if I change time frames, I will know where to go back to. Um, I have it only on regular trading hours, so we can only see the New York session in a 15-minute time frame. So, what I would be doing wrong is if I'm thinking the thing is going down, I want confirmation on a retrace that it were going back down. I'll just show you on a zoomed in version, a 1 minute chart for perhaps. Let's see. See if I can find my blue line again. There we go. So, yeah, what I was doing wrong, this would be, yeah, this is pretty much a directional day looking like here. But sometimes I get caught up in the chop right here, thinking I'm seeing a signal that I'm not seeing. But here would be an example um, of what one of the things I've been doing wrong. So we came up here, we took out a high. If I'm long, I don't need to be buying up here. If I have a long bias, if I'm thinking, okay, we're breaking out of this range and we're going longer, we're going higher, I don't need to buy at the high. I don't need to buy where we just broke out. I need to wait for a pullback. So this is a fair value gap, but it's also in a consolidation. But it would have worked. That fair value gap gets tested several times, so you can watch that, and then you can enter down here. But you don't want to enter up here. If you're entering up here, just that small move down can be enough to stop you out. It's really easy to get in. You see that big candle going up, and you think, "Oh, I'm going to miss out if I don't get in right now." Most of the time, it's going to come back down and test this fair value gap. And you see it did it here and here, and that would be your nice run. Okay. So then we start heading back down to the southern side there. This didn't really give us a whole lot of good signals for a 1 minute chart, but because this is such an aggressive run up, this would be our order block, I guess, right there. But it doesn't give you an excellent signal to get in, except for this is a fair value gap, and that one goes back up just above there. China pushes into it, doesn't make it. So that would be a great place to sell short if you were lucky enough to spot it. But it's hard to sell short on a big run up like that. But that if you're going short, if you think we've just now capped a level, then you've got to take that trade there. You don't want to try to get in over here. But this would be another example. Okay, we got this all this big move, and I say, okay, well I'm going to sell short right there. I would get lucky this time, but most of the time you wouldn't. You sell short right there, these come up and stop you out. So when you're seeing a directional move, this is my point in all of this. When you're seeing a directional move like this, like say this one, we saw this, you don't want to buy at the tops. You want to buy it down here when it does a red retrace. And if you're bullish and you know we're going up here, or you have a pretty good idea you're going to go up there, buy as low as you can. Don't try to buy in a portion of the run. You'll get a horrible fill and most likely get stopped out. And that's what I was doing. That's why I was making my mistake. I was waiting for confirmation that we were going higher. Like, see, you got this, and this is coming down, down, down. I was like, oh, are we going to continue down, or are we going to take out that high? Because this is all I could see at that point. And so I'd say, well, I'm going to wait until it takes out this high, and then I'll know we're going higher. Oh boy, we took out that high. So yeah, we're definitely going higher. And so I'd buy right there. Bad idea. And then I get stopped out. So, got to make sure you have your chart levels marked, relative equal highs from higher time frames, and all of that good stuff. And if you're bullish, buy on a red candle, not a green one. If you're bearish, buy on a green candle. There's a green one. There's a green one. Buy on one of these green candles, not a red one. Okay? It's that simple. Here's a nice green candle you could have bought right there. You have a level marked out where you think you were trading to. That's great. Now, this is a 1 minute chart. This one, we're trading down, down. Everything's kind of starting to slow down. You can see here, pretty aggressive move down. A little bit up and down, a consolidation there, but continued move down. If you try to join in here, you probably get chopped out. But if you did, you need to buy on a green candle. Then we come down a little further, kind of chop, 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 chop. Final push down. Take out some relative equal lows from the previous few days. And then we go back up. This is what they call the cheese. When people are waiting for a reversal, this is the cheese. So they bait a trap. They put a little cheese on it. And as soon as it does that wick, after this long push down, they say, okay, we just ran the liquidity. That's the trap. They set a little mouse trap. They put some cheese on it. And a bunch of retail guys, and say even people like me, they say, all right, that's it. And they run in there and they try to eat the cheese, and they get slapped in the trap. It goes back up and then comes back down. Look how much different that price action is. This actually looks exactly like what you want to see on a reversal, but it was the trap. And then it comes down and stops them out. So they're long. They got their stop here. Boom, gets them again. Now look how this one looks different, how the bottom looks. So this was the cheese. People came in, got caught in the trap, and then I just come in and clean up, and I get to eat the cheese and get the profit. So look how much different this one looks. What do we look for at the reversal? The lowest candle on this rundown, the close is what I would say, down close candle. So we're going to do this candle right here. Where'd my drawing do? There it is. I'll just put a line so I won't have a big old bunch of stuff on there. So this candle right here, you want to mark out the high of that candle. Okay. This would be your order block. We consolidate. This is our new low. We don't want to see anything go below that while we're waiting for a reversal. And we see all of these candles. There's no low, no low. This one peaks above. This is just a potential order block right now. It's not an order block yet. Until we have a candle close above the high of that candle, then it becomes an order block. Okay. So we had one close above it right there. And then we created a little fair value gap right here. See that right there? You know, fair value gap is from the bottom of this wick, top of that wick. This is not a big fair value gap, but it is one. So our order block has been breached with a candle body. Fair value gap respected. Didn't even make it. Respected again. In this situation, I've missed a lot of trades expecting it to come back to the halfway point. But no, let's don't do that. Once it's formed, put your entry point one tick above the low of this candle, the low of this wick right here. So If I was going to put in an entry, it would just be just a little bit above that candle, about like that. That's where my entry would be. So I'm sure to get filled. Because if you put it at the halfway point, you may not get filled. And I've missed several really good runs by one tick. So you want to get filled and then put your stop down below this. And that is a really good entry at the bottom, at the reversal point, just based on that order block theory and the next fair value gap. You buy it anywhere in there, you could buy it, you'll be fine. And we start spooling after that, and it becomes a really, really nice trade. Where would you be trading to, perhaps? This happened at 11:15. Where would you be trading to, perhaps? The high of the day would be your target, because most days, I'll make that a different color. Most days have this V-shaped pattern. They go down, they make a low, they make a reversal, and they go right back to the highs. Most days. Okay? Once they've done this pattern, they do a reversion to the mean. You take your fib tool and you go from the low. Oh man, it's not letting me get down that low. Maybe, there we go. Low, all the way up to the high. It'd be right over here. Yeah, to the high. And then, so let's say you see a reversal signal here and you're wanting to get back in the trade. This would be at 1 o'clock, which is a great time for a reversal. You would target either a low that stands out or the midway point. Midway point would be called a reversion to the mean. So you're just trying to get back to the middle of the range with that trade. And that would be a great trade too. But the biggest thing, the biggest takeaway I want you to get from this, this is where you look for trades. You don't look for trades in here. Stay out of the middle. This is where you get chopped up. You think, oh, it's going down now, and you get in, and they will absolutely, all this big stop runs here, there's tons of micro movements where they're hitting stops all through here, and it could be your stop. I can see one right there. They do it all the time, every day. It's designed to take your money. So you got to get smart and only trade at the extremes. So, yeah, let's say you got in, bottom of this fair value gap, put your stop down. Oh, it shouldn't go below half. Put your stop down here somewhere. That would wick you out, definitely. They do it all the time. It's going up and up and up. Well, I want to preserve my profit, so I'm going to inch my stop up a little bit. They come down, they take it out. Oh yeah, we're going up. We're going to go hit the high for sure. Come down and take you out. This was actually a pretty good move because it didn't do a whole lot of wicking down, but it will do it. Here's one that moved down real far. Oh man, I'm in. I'm in right here. We're going lower, going all the way lower. I just know it. They come out, take out some stops, and then go lower. That's the normal movement. You can combat this by only buying a down move on a green candle and only buying an up move on a red candle. You don't even that's the only way you can join a directional move. You got to wait for one of these pullbacks. I was waiting for confirmation and trying to buy up when we reach a high or a low, and that's not good. That'll cost you all your money. Trust me. But yeah, main takeaway: trade at the extremes. You see how it went just a little bit above that line right there? Get rid of the fib. It went a little bit above that candle right there and then reversed. Didn't know where to go next. Oh, well, we'll just go back here and take out a swing low. Why did it pick that one? But it did. It liked it. Pretty close to the middle, but your your task is to find a reversal point right there. Let's go back over what we looked at in the earlier reversal. Okay, so we had this run up. It popped the high about right here. So I'm going to say that's our order block. So that's our last run up. There's another thing you can do, the fair value gap on the last run to liquidity. Now, did we get cheese on this one? Little piece of cheese there, set the trap. We're going back down. People are selling short right here. And then they come back up. They didn't go high enough to stop them out this time. They might have been able to survive that trade. But that is the normal at a range change, a change in the state of market delivery. So you'll see that pop the high, come back down, hit some stops, and then move it back up. And it'll usually stop these people out before it continues down. But right here, we have a fair value gap on the last run to liquidity. That's important. We came up here and we were kind of just, you're like, is it ever going to hit my take profit? Is it ever going to take that high? And you're just watching and it's awful. But the last run to that high, there's a fair value gap right here. So you want confirmation. It's better to get confirmation in sets of 3 rather than just sets of 1. Okay. I don't know for sure how this thing's going to turn out, but so this is a fair value gap. You just want to mark it out when it happens on that run to liquidity. You're sitting here waiting for a reversal. You're not trying to get in to get it to pop the highs. You're just waiting for a reversal. Order block. This is the last up close candle on the run to liquidity. So we're going to put a line there at the base of it. Now what we're looking for is price. Now that's the wrong color because the price line there is blue, or I don't know what it is. That's the high of the day. I'm going to get rid of it. Okay, so this is a candle that we're wanting to breach. It has to go have a candle body close below it. So you can see there, oh boy, we did. We had a candle body close below it. But then these come up and they go past the halfway point of it. So you're like, no, we're not gonna go into this trade yet. Normally, this would come back up and it would respect that order block. It would not go past the halfway point of that order block. A lot of times it'll stop dead right here and then continue down. Okay, so we're going to keep that one as our order block. We're going to look at this fair value gap, and we're going to continue to watch price action. It goes up and consolidates for a minute, and then we get a fair value gap to the downside. See that? Go ahead and mark that one out. We had one right here too, little one right there. We can mark that one out. That's the one we'll mark. That's the first fair value gap on the rundown. You can mark them both. It doesn't matter. You can mark both of them. Point is, we need 3 things to confirm that we're seeing price action right. We have this, could be an inversion fair value gap, and then we have this one. This one I need to change the color to orange so we can differentiate. This one has a potential inversion fair value gap at this point. Order block here, small fair value gap. These candles were respecting this thing for a minute. It really gave the impression we were going higher, and there were probably people getting long right here, only to get stopped out. Okay, so now we've got our little fair value gap. We're pushing down through. We create another fair value gap right here. I'm not going to mark it, but it's there. Then we know our order block is this blue line. We trade up to the order block, and then we reject. You're good to get in right there on a short. Once you see that, it respects the order block and the fair value gap, you're good to get in right there on that candle. Now it comes down through, if you need a little more confirmation, through the inversion fair value gap. Test it, respects the center of it the whole time. Once we get through it, now these didn't. We went back up there. Now we're respecting this one, respecting it. Fall out of bed. When you have a move like this, you need to get in somewhere near the top because they will come up and try to stop you out. Now, let's say you get in one position here and you want to add later on. It's going down, down, down. You're like, oh man, this thing's just falling out of bed. I'm getting in another one right here. As this goes back up, it's working against your position. So what you want to do, if you want to get in another one, find a fair value gap, put it at the base where the end of that fair value gap is. See how these candles, so you'd put your stop or your entry to add back in right there. If it comes up and gets you, great. But if you enter down here, it's going to move your entry point lower and you're going to get in the hole. So wait. If that one would have filled you. Let's watch how this responds to this fair value gap. See that? How those candle bodies are respecting it? That's confirmation. We're going south. You could have waited to enter there. If you missed the big move, you could wait to enter right there. Confirmation. At that point, we're already in. If you want to add another, make sure you're adding on a green. Look for a fair value gap for price to trade back to. Sell another one short. You're just adding to your position on any up move. Don't add to your position on a down move. And you should have in your mind someplace we're reaching to. In this case, it was the reversion to the mean. Or if you're advanced enough, you could see this as a liquidity draw and put your take profit right there. It would have been a real nice trade. So I think I'm going to jump off of here because my company just got up. But what your takeaway is, wait for one of these reversals. Wait for a recent swing low or a recent swing high to get taken out before you look for entries. Do not try to trade in the middle. You enter here, you can scale in a bigger position on the pullbacks, but your entry needs to be here or here or here, not in here. These are lower probability trades. These are high probability trades. You want to be in the high probability bracket. Highest probability times a day between 10 and 11 New York time and between 2 and 3 New York time. So here's one at 10. Took out a high from a previous session, I'm sure. And then we rolled down to lows from a previous session. And then we went and took out the high we just made this session. And then we went back to the middle of the range. Those are your trade locations. Only trade there and you will improve your trading game 1,000,000 times. If you put this into practice, I know it will help you. Good luck. Love each and every one of you. Be kind to yourself and be kind to one another. Until next time. See y'all.